The US government has shut down. A political standoff where Congress can't agree on a budget, and the money needed to keep federal agencies running simply isn't approved in time. When lawmakers reach an impasse, the government's funding dries up, and the effects ripple out quickly. So, parts of the government stop working altogether. Offices close, services halt, and millions of Americans feel the impact almost immediately. It's like a household where no one can agree on how to pay the bills, so the lights go out and daily routines are thrown into chaos. Essential things get put on hold, and uncertainty creeps in. Essential services like national security and air traffic control keep running, but national parks close. Federal workers go unpaid, and protests erupt as frustration grows. Everyday people, from tourists to government employees, are left in limbo. For Wall Street, this is a nightmare. Markets hate unpredictability, and investors get nervous when the government can't function smoothly. A shutdown means delayed economic data, missed reports, and a shaky outlook for businesses trying to plan ahead. The uncertainty makes it hard for anyone to know what's coming next. The core issue, political gridlock, neither side will compromise, so the government stalls. The inability to find common ground leaves the country stuck. This isn't just a Washington problem. It ripples through the entire economy, affecting small businesses, families, and communities everywhere. Investors see this as a warning sign. Political risk is high, and confidence in the system takes a hit. That means more volatility ahead, with markets swinging wildly as uncertainty grows. The shutdown is a self-inflicted wound, making the US look dysfunctional and rattling markets worldwide. The longer it drags on, the more damage it does, not just to the economy, but to America's reputation as a stable leader on the global stage. Investors hate surprises, especially the kind that can shake the very foundation of the financial system. And a government shutdown is a big one, an event that instantly injects uncertainty into the markets and leaves everyone guessing about what comes next. Stock futures for the S&P 500 and NASDAQ 100 dropped before markets even opened, clear signs of widespread worry and a lack of confidence in the near-term outlook. When both indexes fall, it's not just tech or industry. It's everyone bracing for trouble, from big corporations to everyday investors watching their portfolios shrink. A shutdown means delayed paychecks for federal workers, less spending in local economies, and businesses of all sizes facing a wave of uncertainty about the future. With key economic data on hold, investors are flying blind. So they slow down, sell off, and wait for clarity, unsure of how long the disruption will last or how deep it will go. Every stock price is a bet on the future, and right now, the future looks riskier and more unpredictable than usual. The market's decline is investors pricing in this new uncertainty, adjusting their expectations and strategies to protect themselves from potential losses. When in doubt, Wall Street always plays it safe, pulling back, waiting for answers, and hoping for stability to return. The US shutdown sends shockwaves worldwide. European and Asian markets dip, showing global concern. When America sneezes, the world catches a cold. Less US demand hurts global companies. Amid the gloom, gold shines. Its price surges to a record high as investors seek safety. Gold isn't tied to any government or company, making it the ultimate safe haven in times of chaos. The rush to gold is a vote of no confidence in the current system. Investors are swapping stocks for gold, trading growth for security. The higher gold climbs, the more fear is in the air. Global markets are watching and worrying. In times of global turmoil, the US dollar is usually seen as a rock-solid safe haven, a currency that investors flock to for security. But this time, things are different. The dollar is actually weakening as the government shutdown rattles markets and shakes confidence in America's financial leadership. The world is watching, and uncertainty is spreading. Gold's recent surge is partly thanks to the falling dollar, which makes gold more affordable for foreign investors. As the dollar drops, gold becomes a more attractive alternative, drawing in buyers from around the globe who are seeking a hedge against instability. Investors are now looking beyond traditional US assets. They're diversifying into other currencies and gold, spreading their risk and searching for new ways to protect their wealth in a shifting landscape. Meanwhile, U.S. Treasury bonds remain steady. Despite the political dysfunction, investors still trust that the U.S. government will ultimately pay its debts, seeing treasuries as a reliable anchor in turbulent times. Treasuries are a different kind of safe haven, a bet that, even amid chaos, the system will endure. Investors are holding on, believing in the long-term strength of the U.S. financial system. The bond market remains calm, quietly signaling faith in a U.S. recovery and the resilience of its institutions, even as headlines swirl with uncertainty. But the dollar's recent dip reveals cracks in America's reputation as the world's ultimate safe haven, raising new questions about the future. The search for stability is more urgent than ever, as investors weigh their options and try to navigate an uncertain global economy. These market moves aren't just numbers, they affect your wallet. A falling stock market shrinks retirement accounts. A weaker dollar makes imports pricier. Gold's surge signals economic anxiety, which can slow hiring and investment. Market shifts are early warnings, like checking the weather before a trip. Confidence is the engine of the economy. A shutdown erodes it, making everyone more cautious. When Wall Street gets nervous, Main Street feels it. Jobs, savings, and prices are all connected. The government shutdown is more than political drama. It's a shockwave through the real economy. Pay attention, because what happens in Washington doesn't stay in Washington.